Good evening, everyone, and welcome to your daily dive into the world of Ethereum cryptocurrency. I'm your host, bringing you the latest updates straight from the blockchain frontier on this January 20th, 2026. If you're passionate about crypto, decentralized finance, or just curious about where Ethereum is headed this year, you're in the right place. Stick around because we've got breaking news on record-breaking transactions, market movements, and some bold predictions that could shape ETH's future. Let's jump right in. Let's jump. First up, Ethereum has been making headlines with a surge in on-chain activity that's turning heads across the crypto space. Just last week, on January 16th, daily transactions on the Ethereum network hit an all-time high of over 2.8 million. That's right, more transactions than ever before, signaling a massive uptick in usage. New addresses created in the past 30 days also topped 12.6 million, the highest rolling total on record, according to Etherscan. This kind of growth suggests Ethereum is buzzing with real-world adoption, from DeFi protocols to NFT marketplaces and beyond. But here's the twist. Not all that glitters is gold. Independent researcher Andrei Sagenkov has pointed out that much of this spike might be linked to a large-scale address poisoning attack, a type of scam where bad actors create fake addresses to trick users into sending funds to the wrong place. Blockchain security experts have reviewed this research, and it's raising some eyebrows about the true health of the network. Imagine Ethereum as a bustling city. Traffic is at an all-time high, but some of it might be from sneaky detours. What do you think this means for everyday users? We'll explore that more in a bit. Shifting gears to the market action, Ethereum took a hit over the weekend, plunging about 8% amid these scam concerns. As of right now, ETH is trading around $3,100, down from its recent highs. This drop stands out even as other major assets like Bitcoin saw milder declines. Reports suggest the poisoning attack could be masking genuine user growth, especially after the recent Fusaka upgrade lowered gas fees, making such exploits cheaper to pull off. But let's put this in perspective. Ethereum's price is still up about 10% year to date, and analysts are watching closely for a rebound. In the broader crypto market, we're seeing a 3% dip in total capitalization to around $3.21 trillion, with 95 of the top 100 coins in the red. Bitcoin is hovering near $92,500, while Ethereum's slip below $3,200 has some traders eyeing deeper consolidation. Geopolitical tensions and new trade policies are adding to the volatility, but Ethereum's fundamentals, like its dominance in stablecoin issuance and DeFi TVL, remain strong. If you're holding ETH, this could be a classic shakeout before the next leg up. Stay tuned, I'll share some technical insights later that might help you navigate this. Now, for some exciting forward-looking news, Vitalik Buterin, Ethereum's co-founder, has declared 2026 as the year the network takes back lost ground on self-sovereignty and trustlessness. In a recent post, he emphasized reversing what he calls backsliding in personal autonomy within crypto. This means a renewed focus on tools like social recovery wallets, privacy enhancements, and decentralized apps that put power back in users' hands. Think about it. Ethereum isn't just a platform, it's evolving into a more secure, user-centric ecosystem. Buterin highlighted projects like Kohaku and Helios as key players in this shift. This comes at a time when Ethereum's staking has hit an all-time high, with about 30% of the supply locked up, showing strong community commitment. And with upgrades like Glamsterdam in the first half of 2026, aiming for better gas efficiency, and PeerDAS increasing data blobs from 10 to 14, scalability is set to improve dramatically. Could this be the catalyst that propels ETH to new heights? Analysts seem to think so. Speaking of bullish vibes, several experts are calling 2026 Ethereum's breakout year. According to CCN, factors like rising on-chain activity, shrinking liquid supply, and growing institutional adoption could fuel a major rally. Ethereum enters the year with metrics like $8 trillion in quarterly stablecoin volume, 80% market share in tokenized funds, and over $593 billion in app capital. It's issuing nearly 65% of all stablecoins and holds 68% of DeFi's total value locked. One interview even floats a 555 thesis, predicting Ethereum as the hub for tokenized assets, reaching $100 billion by year-end. Institutions are piling in too. BlackRock's Buidel Fund just paid out $100 million in dividends as the first tokenized treasury to do so. And BitMine Immersion Technologies announced their ETH holdings have reached 4.203 million tokens, worth about $14.5 billion, with heavy staking increases. Even Bank of America is recommending a 4% crypto allocation in portfolios, with Ethereum at the forefront. If you're wondering why Ethereum might outperform Bitcoin this year, it's narratives like these, clarity from new regulations like the Clarity Act, and big players like JP Morgan and Fidelity building on ETH. Let's zoom in on the technical side for those of you charting your own course. On the daily time frame, ETH/USD is at around 3,214s, moving within a declining channel, but with moving averages hinting at a short-term bullish trend. Zepe's analysis notes that while Ethereum is in a broader downtrend from the $4,700, $4,800 region, selling pressure has slowed. Key resistance is near $3,305, and a break above could target $3,350 or even $3,660 by late January, per CoinCodex. On-chain metrics back this up. New addresses have doubled month over month to 8 million. Daily active addresses are up 112% year over year to 1.075 million, and retention is improving alongside price recovery. Layer 2s are competing fiercely. Ethereum mainnet has 3.63 million active users, followed by Polygon at 2.6 million and Base at 2.27 million. This ecosystem diversity is a strength, not a weakness. But it's not all smooth sailing. Recent reports from DL News confirm that address poisoning attacks are worsening, driving some of the transaction surge, but also highlighting security risks. And with the global market crash today, Ethereum slipped below short-term support, raising consolidation fears. Standard Chartered has adjusted their end 2026 forecast to $7,500, down slightly, but introduced a $40,000 target for 2030, betting on Ethereum's improving fundamentals versus Bitcoin. Motley Fool points to two big reasons to consider ETH before Q2. Potential skyrockets if macro tailwinds align and institutional flows accelerate. Remember folks, crypto is volatile. Always do your own research. Wrapping up today's key events, we've got token unlocks and launches to watch. Zama's privacy infrastructure auction runs through January 24, and projects like Brevis, Align Azid Labs, and Fogo have TGEs this month. Coinbase's X402 V2 upgrade is enabling AI agents with modular payments, positioning Ethereum for the agentic economy. And in GameFi, funding dipped 55% last year, but the sector is pivoting to sustainable models. Ethereum's role in all this? Central, as always. Before we sign off, a quick note on community buzz. On platforms like Reddit, daily discussions are heating up about Ethereum's price and events. And from X, sentiments are optimistic with staking at 46.6% of supply and L2 adoption surging. If you're in Fresno or anywhere in California, local meetups are popping up. Check them out to connect with fellow ETH enthusiasts. That's your Ethereum update for January 20th, 2026. What stood out to you today? The scam concerns or the bullish predictions? Drop your thoughts in the comments below, and if you enjoyed this, hit that like button. It really helps us reach more crypto fans like you. Don't forget to subscribe for daily news that keeps you ahead of the curve, turn on notifications so you never miss an update, and share this with a friend who's into ETH. If you're ready to dive deeper, join our community Discord or check out our premium newsletter for exclusive insights. Thanks for watching. Stay decentralized, stay informed, and we'll see you tomorrow for more on the crypto world. Take care.